You know, congratulations on delivering your numbers in what is actually a tough quarter. But, you know, the toughness is something that a lot of the consumer companies have called out for. And I'm looking at your remarks as well. You're witnessing moderate growth or moderating growth in urban markets while rural is continuing to recover gradually. Two-part question here is, what exactly is happening and what are the reasons that you attribute to this weakness? Because we had a comment coming in from Suresh Narayanan as well, saying that maybe shrinking middle class is what is impacting growth in urban India. What are the determinants of this moderating growth, if you could comment on that first?
Yeah, let me first of all state that where we come from is basically the business we are in,
right,
and what we experience. So I should just comment from the lens of Hindustan, Unilever, and our categories and our presence in our portfolio. And as we mentioned previously, the rural markets have been on the recovery path for some time,
right,
and continue to recover gradually. And please note that it's about a third of our business comes from rural areas and 2/3 comes from urban areas. In the recent near term, we have seen a certain slowdown in the urban markets. They are continuing to grow, but the growth rate is trending down. And on the whole, therefore, the markets are slightly down compared to where they were, say, a few quarters back. Now, it's a near-term phenomenon, and it could be driven by various macro factors that could be short-term and long-term in nature. And where we come from, basically, is that we have to be very, very focused to go where the growth is. Right. We have to be very, very focused on investing behind our brands and competitive capabilities, and also really keep consistent with our market development. And finally, we have to be very competitive, increase our competitiveness, and get stronger in every market condition. Right. So the focus we have in a company is to see this as a near-term market trend, and basically stay focused on doing what's right for the long term, and measure our success in the level of our competitiveness, which, as you noticed from Ritesh's comments, we have in fact gained market share. We're pretty pleased with that progress. We're seeing strong leading indicators, and we remain very focused on essentially getting stronger through this market condition. Let's not forget that we're in a very exciting market, and often we get moved by near-term trends. The overall macro opportunity of the Indian market is absolutely solid. It's secular, and we should basically all be working to invest behind that trend, where the per capita consumptions in across categories are very, very low, and we'll see tremendous growth in the many quarters and years to come. So we should never get too caught up with the near-term trends and what's happening with, say, 2 or 3 or 4 months or even 6 months.
You know, just a follow-up to that largely, because the second part was, Ritesh in his prepared remarks did say that in the very near term, they don't see any further acceleration to demand. So in light of that, what can one look at when it comes to growth? There is low single-digit price growth, no further acceleration to demand. How should one look at least the next few quarters? Long term, yes, we're all positive on, but in the very next few quarters.
So I'll give it a shot, and I'll also ask Ritesh to help complement me. We do know for a fact that there's been no or negative price growth because of the deflationary period in the last few quarters. We now start to see that coming to an end. This year, our intrinsic price growth is flat. We expect to see price growth come back. There's inflation in some of our big categories, and as we mentioned, we will be looking at covering our costs in those categories. So therefore, price growth that tended to be in 3 or 4% long-term trend in the CPG market we account for is going to start trending back to the mean. We expect. And it'll all depend on really what's the level of inflation, and therefore we'll have to calibrate accordingly. The volume growths are volatile. They move up and down from quarter to quarter. And as rural is coming back and is higher than urban, which has been the longer-term trend, that's a good sign. And we'll see how the monsoon, the kharif crop and the impact of that on the economy is. And most indicators are positive, and we will have to see it being realized in the market. And if that does come through, then the rural recovery should continue to move on. And as far as urban is concerned, I cannot forecast the future. All I can say is that we should basically stay very focused on making sure that we do what's right for the near term, which is competitiveness, and for the longer term, which is investing behind our brands, capabilities, and stay consistently invested in market development, which is a real sort of the price in this market.
So just let me build and let me help you how you could think about it by quoting both internal and external factors. As Rohit mentioned, we know the market trends in terms of where urban is going, where rural is going, and hence cumulatively put together, we might see more momentum in rural as recovery happens with better monsoon overall, as we've seen, hopefully better agriculture output in short term. That should help rural recovery better. But urban, which is 2/3 of the business, we mentioned that the growths are moderating. So hence demand terms, in short term, the demand signals are more stable rather than showing material difference. In parallel along with that, 60% of HUL's business is growing in high single digit. This quarter, I covered in the little while ago that home care at 8% growth, beauty and well-being, if I ignore the one-off that we have in the base, 7% growth. That's 60% of HUL's business. That is growing in high single digit. We know we have called out and we spoke about our personal care business, and there are 4 actions we are taking for it to change its growth trajectory in the next couple of quarters. That's the second signal I would want you to consider. Third, within the area of foods and refreshment, we spoke about tea. Overall tea growth of volumes in the market have been subdued because of the downgradation. Tea is now seeing inflation. We have almost 25% inflation, and there's a deterministic sign about that inflation that will lead into price increases. Overall, as Rohit mentioned, that we should see the trajectory of pricing, which was negative. This quarter, if I exclude the one-off, it is flat, and you will start seeing from next quarter onwards low single-digit price growth. So a combination of the external demand factors and combination of how the internal portfolio will transform and will grow in next few quarters, you could just put together and then think and make up your own thinking where it would be.
Sort of revenue growth.
Yeah, as I said, those are the levers that you would want to think together.